406 Dream Team eXp Realty, and I'm here today visiting with a lender who is super knowledgeable about the industry, about what's happening in our community. He has knowledge in national and is very super hyper local. So I'm going to let Chester introduce himself, and he's with Mann Mortgage. So Chester, can you tell us about who you are and how long you've been in the industry?
Yeah, I'm Chester Freeman. I'm regional manager for Mann Mortgage. I oversee 5 branches in the Northwest, but I've been a developer and a builder and a business owner since I was 26, which many years ago. I entered the mortgage world right after the crash, not the recession of 2008 and 9. And since then have built from myself to where I'm at and my amazing team. Without them, I couldn't have done it. But now we have 5 branches and going full speed ahead.
Awesome. Yeah, it's well deserved. You're a hustler. So what I'd like to talk about today is seller's objection. When I'm out and I'm talking to sellers and talking to folks in the community, really trying to educate them on the amount of equity they have in their homes and the opportunity to use that equity to either downsize and get themselves into a home that works and they have the cash to live in a more fruitful way, or they can also do things like refinancing, or they can get into a different home that they may want to move up and upgrade. But I've been hearing from sellers that they're afraid that they're not going to find the equivalent when it comes to rates, when it comes to the house. And as a buyer, I wanted to ask you, what's your advice when it comes to the rates? Like, people are stopping dead in their tracks right now and they don't want to buy. Do you have any advice for people who are afraid of these interest rates that are happening right now?
So that's where the longevity of being in the industry, or being a developer, or being a builder, or being in the mortgage world, you've seen the trends over time. And I just go off of facts. And this is not 2008-9 where the housing crash was caused by bad loans and whatnot. And if you look at the 100-year average, let's just use 50-year average of mortgage rates. The average rate since 1970 has been 7.74. Obviously way up and way down, but that's the average. And typically after a recessionary period, you can call where we're at whatever way you want, but within a year and a half of that, rates come back down. So positioning yourself to buy and be where you want instead of being controlled by the fears in the market is up to you. Where do you want your family? Where do you want to be when the tide changes and you're in a good position? So let's say rate is 7.5% today, but you get into a home you really want with your family. You move to a place or where you want to be, your job, everything about your life, you get to move forward. And then within 2 years, rates go down 1% and you're saving $300-400 a month. And you're gaining equity again in your home.
Yeah. I mean, equity is the huge factor right now. And not just sellers, but just for buyers who are currently renting. You had shared with me before the difference in the stats between renting versus buying your own property, what the difference in net worth is, and it was pretty stellar difference in numbers. Can you share a little bit about that?
Yeah, nationally, and you can look this up, and it may be different in different places, but the national average homeowner has a net worth of $265,000. The average net worth of a renter is $6,300.
It's a huge difference.
Correct. They're paying somebody else's mortgage who's gaining equity over the course of time. The home in your home is the biggest asset builder most people ever have.
Yeah.
And to position yourself for that is longevity and security. It's your home.
I mean, this is, in my opinion, why, I mean, and I don't know if you agree with this, I would assume that you do, but why real estate is still the best investment when it comes to long-term wealth, building for your family, generational wealth, and just really setting yourself and your family up for a better future. I don't know of a better investment than buying your own home.
Correct. And a lot of people, you getting back to what you just said, they are, oh, I can't trade or I can't, and now's not the good time. I'll bring up the Tesla stock. I think I brought this up to you before, is people are like, oh, I should have bought it when it first started. I showed you the graph. People are still making a ton of money off that.
Mm-hmm.
Let me stop there. I'm not a big fan of stocks and the stock market. I've only bought one stock in my entire life, and that was oil after COVID, because I knew we all wouldn't stay in our homes. We'd get in our cars someday and drive again. Planes wouldn't be grounded. They would have to fly again to keep things going.
Mm-hmm.
The only stock I've ever bought. So this isn't a stock market thing, but people are still making money off something because they're not afraid to continue on in a shown or proven asset, which is real estate.
Mm-hmm.
As things continue to climb, they have forever. People also bring up, well, in 1984 when rates were super high, but houses cost a lot less. Let's use Montana for an instance. Is yes, but they don't think that the total aspect of that is minimum wage is $2.15. It's all relative.
Yeah.
And this market and what you see on social media is driving the fear factor, which controls people. And people miss out on opportunity.
Absolutely. Yeah, I do think that moving forward, people should not base their ideas on fear and their choices when it comes to real estate on fear. It is one of those, it's proven over time that it is the safest investment. It's not risky. It's eventually going to go up. It's it might come a little down, but it's going to come back up. The market always comes back around, and you're growing that equity over time.
And getting back to my longevity in the business world, I just mentioned to you, I just hired a Spanish-speaking loan officer and just hired another one here in Bozeman, Montana. I truly believe what I'm saying because I've seen the track record and the history of the industry. I'm not going to bring people on that I don't feel will be very successful.
Yeah. No, you definitely have a different approach when it comes to even providing you don't provide pre-approvals, you provide pre-qualifications.
Not pre-quals, but pre-approvals.
Yes.
So pre-approval is we fully assess that customer. I won't send a pre-approval unless that loan is going to close. And none of my loan officers, my teammates, will do that either. We make sure there's not going to be any hiccups from our side on the transaction. Yeah.
Which, when buyers working with you, it's a good position to be in, because when you have that track record and you have an agent that comes to you with a Mann mortgage client, we're more likely to say this is a solid offer because they only bring folks who are qualified buyers. So just wanted to throw that in there. That's a pretty important.
Yeah, and I even leave it up to if I'm working with a buyer's agent, I give the seller's agent my phone number. I'll talk them through without giving specifics. I wouldn't give the specifics of our customer, but I'll let them know, yes, this will close.
Yeah, it's huge. I've always really enjoyed working with you. So getting back to just the general feel of the market, I definitely getting the sense from folks. I'm still encouraging people to move forward. We know that we're still below the average in the last 50 years, like you said, just below. And as far as general feel, where do you see our market going? Where do you see in the next year? What are we looking at? Are we looking at? I guess people are wondering, is there going to be the big crash? When is the bottom going to fall out? That's a question that I get a lot. and I am basically telling them that it's not gonna fall out, and there's not this big hanging on for 2008 all over again. What's your take back on that?
So I'll use the average for over 100 years. It's more like 120 years now. Is during these times, we see the recession, we see the inflation, we see some houses are overpriced because people paid 100,000 more than the listing price was, right? So there will be a flattening, and in some areas in the United States, more undesirable areas, those prices will go down. But typically during times like this, desirable areas like the Gallatin Valley, for example, or the other markets I'm in, people want to live there.
Yeah.
So the market will flatten its values, but right when the market changes, prices start going up.
Mm-hmm.
So, and possibly, which hopefully I believe in the next year and a half or so, that the rates will come down. So win-win if you're in a place where you bought a home. Your value's gonna go up. If you didn't buy, you're gonna miss out on that.
Yeah.
And the rate goes down where you save more money. So in an area like this, based on all the averages and the trends, it's desirable to get a home if you can. And that's where you talk to your agent and you talk to a lender like myself and say, hey, what's your current financial situation? What's your goal in 3 years, 5 years? The market right now is freezing everybody in the position they're in. And to me, that feels like somebody put me in a cage.
Yeah.
You have opportunity to grow and be in the right position when things turn.
Yeah, this market is opportunity.
Mm-hmm.
I mean, that's my general feel is opportunity, and it's doing the opposite for a lot of people.
Yeah.
Which I just want to encourage people to keep moving forward and go after their goals, and you know, time doesn't stop because interest rates are a little inflated. We got to keep going, and you'll reach your goals faster if you don't let fear dictate your choices.
Correct. I mean, jumping forward is one thing, but moving forward with wisdom and educating yourself, learning from people that have been in the industry a long time, from the real estate side, like yourself, Melissa, and obviously I know a little bit about the mortgage world. Position yourself conservatively, think smart. Can I handle this? Can I get rid of some other debts? Can I take care of those, but still have the position in the home ownership, which long term is my biggest asset.
Yeah. And I mean, especially for if there's folks who are renting right now, are currently just basically you're throwing your money out the window, where if you were buying a house, you would be putting it into a long-term savings almost. It's like a bank account where you can turn around and sell it and gain equity on it. So it's a smart move to buy now.
Yeah, it's a smart time to buy anytime except 2008
Yes.
or 6, because that was caused because of the guidelines of the mortgage world. Freed up lenders that, I won't say any bad things, but didn't do things really that took care of the customers. Now there's a lot of guidelines in place to make sure lenders don't do that. I would have never done that. I'm glad I got in after that.
Yeah.
It's because taking care of a customer, I'm doing a loan right now for my first customer ever, another one. They're buying in this market.
First buyer.
And for an example, obviously I had them when I refied them at 2.875%.
Yeah.
Right? They're selling their home and buying another one because they're not gonna let this image in the market or this idea of fear hold them where they want. They're moving to another town to be closer to work, to be better place for their family, and they know they're gonna have equity and it's gonna continue to grow in that home.
Yeah.
Plus, if they wouldn't have bought when they did, they wouldn't have had the $200,000 equity they have today in that home.
It's a hindsight situation that they're going to be saying the same thing about the house that they're buying now, 5 years from now. they're gonna be saying the same thing. Glad I bought when I did because I have all this equity. And in this market, the demand just continues to stay relevant, and it's not going away, and the values will, in the next 5 years, it's gonna be a much different picture.
Correct. So let's just put the last year and a half in perspective on an average home here in Bozeman, Montana. If somebody didn't buy a year and a half ago, they wouldn't have gained $100,000 in equity.
Yeah.
So let's say that flattens out for a year and a half, but then that next trend comes and it goes up 100,000. Who's going to miss out on that opportunity?
Yeah.
And you have a home where you're safe and secure with your family.
Yeah, it's your space.
Mm-hmm.
It's yours to do as you please.
Ah.
To paint, decorate, and any improvement you do, that is your equity, your sweat equity gained in that property, not your landlord's.
Correct. I'm connected to a lot of developers, and I have the same mentality. I'm super conservative and protective of my family.
Mm-hmm.
But the developers I know who are huge around the Northwest, they're going everywhere and buying land.
Yeah, yeah.
That should put it in perspective. And we all know the old statement of when things are scary and rough, who gets richer? The
rich.
wealthy.
Yeah.
Because they know the trends of time will change, and everything they got for a discount or at flat prices as they are now will climb eventually.
Yeah, yeah. Smart.
Yeah.
And we should be following their lead.
Yeah.
Following in their footsteps.
Correct.
Well, I think as far as just, I really want to chat with you today about what buyers' objections are and understanding the interest rates, understanding where we're at now, and why we should not be pulling the brakes, and why we should continue to move towards our futures. And I think we covered that. Is there anything you think we can add to that people would need to know, or?
Just trust your real estate agent, somebody that cares,
Mm-hmm.
like yourself. I know I wouldn't be sitting here if I didn't know you care about your clients. And trust your lender, somebody that has the tools that are going to help you.
Mm-hmm.
It's like our systems with Simple Nexus, that's a simple app. Or we have something else that you get after you close your loan, where you get to monitor the value of your equity in your home, or what it may rent out for someday, and you decide to buy another one. The team aspect of who you put yourself in contact with as a home buyer or a seller and moving on to another house is critical. You want that team instead of this online thing where you don't know who you're talking to some days.
Yeah.
Find people who truly care about you.
Yeah, it's very true. You don't have to know everything. You just have to know the right people who you can trust and will guide you in the right direction.
Yeah, it's like videos. I couldn't set up a video.
Yeah.
I can't do a lot of this technological stuff,
Yeah.
but I have amazing people,
Yeah.
teammates that can take care of that.
Yeah.
Same thing with buying or selling your home. Make sure your team is strong.
Yeah, I agree. Well, on that note, I appreciate you taking the time to sit and chat with me today and educate our viewers. And if you would like to get a hold of Chester, you can reach him. What is a good phone number for you, Chester?
Actually, I have a number of them.
Okay.
Let me get my card.
Okay.
So my cell number here is 406-312-9781.
Okay. And so you can call him. I will also put in the notes, I'll put his email and I'll put that phone number and any way you can get a hold of Chester and his team. And as always, thanks for taking the time to listen, guys. And remember, knowledge is power, and with power you can make the best choices for your future and your family's future. Thanks.
Oh, thank you, everyone.
Thanks, Chester.